You're listening to the RE Social Podcast with your hosts, Andrew and Vince from OnV Invest. For more information, go to onvinvest.com.
What's up, you guys? Welcome to another episode of RE Social Podcast. Today we have a really cool guest. I'm actually a big fan of Tarl Yarber. You guys would have known him if you watched anything on Bigger Pockets YouTube. Does a lot of flips. I believe he calls himself the recovering flipper. Hey, Tarl, welcome to the show.
How's it going, Vince? Thanks for having me.
Thanks,
and
man. Nice.
Drew.
He's here. Drew from Kansas is here. I wanted to usually give people like a little 90-second, like if you want to explain your background, you have 90 seconds, Tarl. What do you got for us?
Oh, I only need an hour, but yeah. No, hey, thanks for introducing me, and thanks for having me on your show. The short version of it is, yes, I have done a lot of flips, a little over 600 or so, give or take. And I call myself now a recovering house flipper. Mainly the last couple of years, I've been focused more on cash flowing assets because I'm recovering as a house flipper because I've been addicted to the fix and flip income for so long. Flipped a lot of houses before we even kept our first rental. I didn't keep my first rental until about 2016, and I wish I kept a lot more, especially now, right? We also run an events company called Fixated Events. We host a conference called Limitless, and in June next year, you go to limitlessexpo.com for that. And then we also have a lending business, Fixated Funding, where we lend to experienced borrowers as far as investing is concerned, mostly hard money.
Oh, nice, man. Limitless, that's with Kenny, right?
Yes. Kenny is with me, just to be specific. No,
That's
yeah.
nice.
Ken Macro and I were partners on that, and we run the entire event. Him and I partnered on it in January last year. We were at a bar in Laguna, complaining to him about how I need to run this conference. That we used to have a conference called the Big Badass Real Estate Wealth Expo that we ran in Seattle for years pre-COVID, and then when COVID hit, we switched it to virtual expo. And just to be able to like not lose money because we had so many financial obligations running a large, our event usually had between 1,000 and 1,500 people into it. So not to make this about events, but there's a lot of financial obligations that go into contracts and stuff with venues and different third-party companies when you're starting to run a conference that size. So we had to scramble, make it a virtual expo to basically not lose money. And then after that, I didn't do one again until I decided I was going to do one in 2022. Got a contract set up for Arizona to do my conference, and I didn't want to do it. I was actually pretty like dragging my feet on it, and then I bitched to Ken about it. And Ken's like, "I have this kind of weird idea for this event for financial stuff," and I'm like, "Cool, let's talk about it." And then we completely transformed my expo into Limitless instead. So that's the short.
How did you get involved with Ken?
Ken spoke at my 2019 expo, and him and I immediately hit it off. There's a group that him and I belong to called EO, Entrepreneur Organization, and he's been a part of it for 30 years. And when we met at my expo in person, because our friend Andrew Lanoy, there's Mike Ayala and Andrew Lanoy run a company called Three Peaks Investments. They do mobile home parks and stuff. They're buddies of mine, and they're good friends with Ken. They were coming out to speak at my 2019 expo. They said, "Do you want Ken to come out?" I'm like, "Hell yeah, I want Ken to come out." And so Ken came out. We became best friends for life, and I consider him probably my top 2 closest friends. So.
Wow, that's really cool, man. So, I'm going to the one with Jason Hartman. Are you coming to that one in Scottsdale?
No.
Oh, no.
No. Yeah.
Okay. That's a totally different ball
Is it
game,
Jason Hartman's event?
Yeah, I forget the name, but it's Ken will be there too.
Ken
I know
and him are friends.
Yeah, him and there's another guy. They all hang out together all the time. But that's cool, man. So let's talk about you. Enough about events. So how did you get started? How did you get involved with flipping?
The short version of it, in 2005, I went to a sell-a-thon called the Real Estate Wealth Expo. Had 40,000 people there. Donald Trump was a keynote speaker. And they also had a whole bunch of other real estate gurus there. Tony Robbins was there as well. Russell Simmons was there. A bunch of big VIP type speakers in 2005, back up before the last crash. And I bought a seminar. So I bought a seminar on wholesaling real estate, put that on my credit card. And then I basically went out and did what the seminar said to do, door knocked, did all that crazy stuff. Third wholesale deal I did was $100,000 double and closing deals. So double close basically. And then I stopped doing it for years after that because I hated it, made my money, stopped. And then long story short, in 2010, I got back into it full time in Seattle, and partnered up with some buddies of mine. And then we started flipping in multiple states, got really crazy with it during the REO days, real estate owned foreclosures, and just went to town. We were in 7 states at one point.
Nice, man. What was going on with you that you decided to go to the seminar?
In 2005?
Or were you like not working at McDonald's, or like what were you doing?
Yeah, so I was a broke college student. So I was 20 years old at the time, and I was going to college, California State University, Sacramento. And I was also doing Air Force ROTC. I was going to be an officer. That's what I wanted to focus on. And then I read a lot of books. Always wanted to run my own business. Always wanted to run, make money. Basically, I grew up pretty broke. And Rich Dad Poor Dad, I read at 17. So it always kind of stuck in my head. Robert Kiyosaki was speaking at this conference. So I drove down to LA, which is where it was, mainly so I could see Robert Kiyosaki. I had no idea what a sellathon was. And I'm calling it a sellathon, basically, where like most of us have been to it, where it's like, it's only a $200 ticket for a 3-day event. Wow, that's a huge deal. Well, the reason why is because they're going to sell you a bunch of shit. So that's a lost leader. They do it for marketing wise. And it's actually really hard to make money on events without selling stuff from the stage. So I went to that, and I was young and I was excited, and a bunch of big, huge speakers and crazy stuff, and run to the back of the room, and everybody's running to the back of the room. And so I thought I should too. And I wanted to make money, and the guy that was speaking the right stuff sold me on the right thing. And then I just dove head first because it was all my money. I didn't have any money, so I put it on my credit card. And I was freaking out about that. So basically in my head, I had 30 days to make all that money back, or else I was going to go bankrupt or something, even though it was only like $1,500. But when as a college student, it might as well have been like $15,000 or not more. But so yeah, that's why I did it. And then got to work on it, door knocked, terrified, cried in my car, right? Would do laps around a house like over and over again in the blocks, and never knock on the door, walk all the way up and down the driveway, and then leave and never knock on the door. And I was terrified, right? But I was just trying to find a way to make money.
We have something in common, man. I don't know. You know Vinny Chopra, right?
No.
Oh, Vinny Chopra is like, he's got like $1 billion in real estate. Anyways, but I used to door knock and then sell books door to door. And I used to sit in the car and cry by myself too, and then I'll walk around and I'll be like, oh, should I get into this door? Because they're slamming doors on your face. And I came back and sold books again. So that, learned a lot. Can you tell us about like things that you learned about yourself? Because I learned a lot about myself from doing this for 2 summers.
Yeah, I hate knocking on doors. I learned that right away. So
yeah, you learned that. Yeah.
Honestly, a big thing for me is that like just growing up as a kid, my parents never wanted to bother anybody. So like they were always big on, I have a brother and sister, and like, just, hey, don't bother them. Hey, quiet, don't bother them. Like, hey, like when we were sending food back in a restaurant, well, you're not allowed to do because it bothers the waiter and waitress. Like everything was about like, just let other people live their lives. You live your life. Don't bother other people, basically. And so it was so ingrained in my subconscious that I felt like I'm knocking on this person's door, that I'm basically disrupting them and their entire lives for something selfish of mine. And so that was kind of a wake up call for me. It was also a wake up call to realize nobody gives a crap who the hell I am, and they're really not thinking about me 5 minutes later after I leave knocking on the door. So all of it was built up in my head, all the fear, all the anxiety, everything. It all had to do with what I thought of what other people thought about me. So at the end of the day, most of those fears were from me worried about what some stranger thought about me, right? At the end of the day. And so, I mean, what's the worst thing that is going to happen? Sure, are they going to pull out a gun, stick the dog on me? Like, maybe, right? But I highly doubt that's going to happen. So
it happened to me.
Yeah, see, it happens, right?
Yeah.
And then you just move on.
He ended up buying a Bible after that, though. So it was pretty good.
That's good. See, it worked, right? So yeah, I mean, I learned a lot about that, and I also learned that my car was the best education that I ever had, because I would just listen to CDs at the time, sometimes cassette tapes, and I was just, while I was driving around, I was just plugging my entire brain into personal development and different business CDs, and didn't really have podcasts back. Actually, they didn't have podcasts back then. And so I was just putting my entire car into a university while I was driving, knocking on doors. Uh, and then I also learned that I get really fixated on something that I'm going to go do it. So that was what, 17, 18 years ago. And looking back on it, just that tenacity, for one, learning to not care what other people thought was a huge deal to overcome. And it took a long time to get to that point. And then realizing and accepting that nobody really is thinking about me to begin with. So what the hell does it even matter? And all people care about is what you can do for them at the end of the day. And if I came and knocked on their door and I had a solution for them, because these people I was knocking on their door, like these were people on notice of default, right? And in California, that was okay to do that. You can knock on those doors at the time. So if I had a way to be able to help them get out of not getting their house foreclosed on, then I was coming with a solution. And if they didn't want that solution, then that's their problem, not mine. And it took me quite some time to get over that, though. Yeah, hope that makes sense.
Yeah, man, that definitely makes sense. Drew, did you have a question on this angle? Was that Tarl?
I was gonna say, but just so you know, when I got back into real estate investing, I realized I'm never knocking on doors. So that was the other side. I realized I'd much rather just buy the house and not have to worry about what wholesalers do out there. Wholesalers, you guys actually have to know more and go through more, in my opinion, than most any other type of investment strategy out there. Just because of the crap you have to deal with on a regular basis to source off-market deals. And it doesn't matter what asset class you're focused on. It takes a lot to find off-market deals. It takes a lot of knowledge, takes a lot of energy and effort. You got to go in marketing, negotiation, have to know how to analyze the actual deals themselves, how to deal with us buyers and RBS too, right? You got to know a lot. So it's a lot of work to be a successful wholesaler, but it does pay off.
Nice, man. My follow for, when I was using selling books and stuff like that, I learned a lot of more personal development than actually making money from selling books, right? So that was my takeaway. And looks like you had similar things you had about yourself, and you didn't want to knock on doors. Now, my next question is, you did 600 flips. How many flips did you do before you owned your first rental property for yourself?
Like
That's
almost 500.
Almost 500, right? So
yeah.
Who did you meet or who did you talk to because you said that you went to see Robert Kiyosaki. He would have immediately told you, hey, bro, you don't have to sell 500 houses. You should start owning stuff, right? So why did it take you so long? And then after that, what was that point and how did you jump over the fence?
So I saw Robert Kiyosaki in 2005 when I was 20 years old, just to be clarifying there. He never talked to me or knew who I was.
Okay.
But in 2000, end of 2010, when we got into real estate, and then 11, 12, 13, 14, 15, 16, 17, 18, like just going hardcore. It took me, but for me, I didn't really get into flipping houses because like I made some conscious decision of I'm going to flip houses, right? For time's sake, that story is way too long to break down all the nuances of the people I met, the circumstances to get me to a point to where me and these two dudes were flipping houses together. But the short of it was like we were doing it for money, right? I never did real estate as an investment early on in my career. I was doing it to make money, and that was it, right? So I never looked at it as like, oh, we can like buy this property and get depreciation and then have cash flow. And I'm like, I could sell this thing and make 25 grand right now. Yeah, that sounds cool. Let's do that, right? And then let's do it again and again and again, because this is now paying our bills. This is really cool, and we have a ton of volume. We make 5 grand on that one. Whatever, flip it to somebody else, right? Like, oh, we might make 30 on this one. Cool. Let's actually flip this one and keep it ourselves. Keep it to flip instead of selling off to somebody else, wholesaling or whatever. And we just kept doing it over and over and over again. And my first rental that I kept in 2016, I still own to this day. That one was just more like, I just looked at it differently one day, and I was just like, maybe we should keep one of these. And I pulled out believe it or not, the Bigger Pockets rental calculator, because I didn't even know how to calculate rents. I never even looked at this stuff. And so I plugged it in there. I'm like, oh, we might cash flow like $400. I'm like, well, we don't need the money. We got lots of money, so that's fine. Let's look at keeping this one. And so let's do this BRRRR strategy thing that Brandon coined. And when it came down to it, went to go do the refinance, we had to come to close with $7,600 to close. And I was like super pissed. And this is on the refi when we're done with the rehab. And I was pissed because to me, I just spent the last, what was it, 5, 6 years of my life where every time I come to close, I get money. And now all of a sudden I'm being told by the escrow that I have to come to close with money. And I'm like, this property is losing me money. That's how I thought about it. Right. And we were cash flowing after it was rented out. I think our cash flow on it was like $670 a month or something like that. So, you do the math on that, it's almost 100% return on your money, right? So on the money that's left into the deal. And my wife is the one that said I was an idiot. And then we came to close with the $7,600 after the refi. And we still have that property to this day. And we've split it off into different parcels, or we've done all sorts of crazy stuff with that thing. But, and it was all because we made that one decision. Looking back on it, I wish we made that decision sooner, and I wish we did more of it.
Yeah, man, I actually very clearly remember watching that episode. You have that episode on Bigger Pockets, right? You break down the numbers.
Yeah, I probably do. Yeah. Too many of them.
So, okay. So I wrote some stuff down while you were speaking really fast. So this is the main concept of our podcast, right? You quickly brushed it along, like as though everybody knows it. I know it, Drew knows it, you know it, but I want you to break this down for people. You said, I was doing these flipping as a means to make money. And then at some point, something triggered. And then you said, oh, wait, I should be investing. So can you explain to people what's trading time for money versus like investing?
You got active income and passive income, right? So, I mean, the IRS spells it out to you pretty clearly on when you do your tax returns. But if you're trading your time for dollars, then basically, flipping kind of does that. Now you could do flipping how we do it now, where I actually am not trading my time for dollars, and because I have people doing it for me, but I've traded their time for dollars and I've just basically bought their time. So I created a business around that to where essentially somebody's time has to be put into making that active income when it comes to flipping, whether it's your contractors, your project managers, yourself, right? Whatever. And you're just making a paycheck at that point. And you'll never make money on that property again once you sell it. And that was a big wake up call for me years later when I look back on how much some of these properties are worth today, and I'll never make more money on them ever again. So that's that active income, trading time for your dollars. And now that said, you got to eat, right? And I just want to put a caveat on this. Was one of the things that recovering house flippers actually have a challenge with. And this is anybody in kind of commission sales, right? And that's kind of what a house flipper does is, if you stop flipping, then how do you pay your bills if that's your main source of income? And you're like, oh, I'll just buy rentals. Cool. How many $200 a month or $300 a month cash flowing rentals do you need to pay for your lifestyle? Oh, I need 100 of them or whatever, right? So that's a little hard to come by if you're not also like eating while you're trying to build up that portfolio. So it's hard for some people to transition into that and do a balance of it. On trading, you're like basically having your dollars work for you to get back time. That's more of a wealth building strategy. So you have income versus wealth, just to summarize it. So house flipping builds income, housekeeping, I guess, or building a rental portfolio builds wealth. And if it's the right portfolio, that is. So looking at what we've done with our rental portfolio over the years, the ability to have that, yes, that appreciation, but also have that cash flow that's coming in. Essentially, since we started keeping those properties in 2016, all the other rentals, I was breaking this down to a buddy of mine the other day, all the other rentals that we own, every one of them, we've never used money outside of the rental business to buy more rentals. Like we never really needed to since then. Most of our properties are BRRRR. So when we would sit there and like even we all our rents we'd be getting, all the cash flow, the cash out refis we would get, we would just put that back into rentals. And it all started from the first 3 rentals we bought in 2016. And to this day, I could say that like I haven't even taken my active income from my flips and put it in the rentals. It's just been from my rentals, putting it back into rentals, right? So it's kind of a cool little thing that if you build it the right way, but besides the point. But what that's done now is that investment money is being invested again into other investment properties to make you more investment money, right? If that's what you're trying to get at. So that's building wealth, right? And I'm not having to work for that. That said, because I'm a kind of a details guy, there's people that own a lot of rentals that work their ass off too, right? And there is a misnomer to think that passive real estate is passive, right? There's only certain forms of real estate that's passive, and that's typically not if you're the one that's the main landlord. Like even if you're hiring property managers and all that kind of stuff, typically you still have some sort of like active role in some capacity, whether it's bookkeeping or dealing with the property manager or whatever. But you have to put some layers between you in order to be truly passive, or you have to invest in other people's deals, like as an LP or something like that, limited partner. But that's me getting too detailed, I think, because my brain works that way. So
No, it's really good, man. So
there's no such thing as passive real estate. Sorry, just throwing that out there.
If I had to break down what you were saying, is there's two different things, right? So one is the IRS classification of income, right? So there's earned income, active income versus passive income. So you get a tax advantage if it's passive income, and you can use all these deductions, depreciation, write-offs to kind of cancel out. So you can almost go to like a net zero in terms of your income coming in. So that actually makes you live off less income than actually active income. The other interesting thing is the wealth building stuff. I would say it is impossible to be wealthy by just working without investing. Doesn't matter how much money you make. You can make $2 million a year. Guess what? You'll be paying 1.1 million in taxes, like in California, right? So then you're going to have a high lifestyle. You're going to spend it all if you don't invest. If you just even save the money, let's say you save 500,000, it's going to erode on inflation, right? So it's like the monetary system, the central governments, the centralized, money printing, all these things have set up in such a way, the economy, how it runs, it's not even almost, they penalize you for not investing because you're not promoting economic activity, right? So that's what I tell people. So like you were saying, you have an active income, which is the flipping, which is active. You make money, you need to buy food. Can't tell your wife, wait for the next month's rent, $200 to come in. So, she can buy groceries. It's stupid. So otherwise you need like 100 rentals, right? So
to build on that, the government also penalizes you for holding cash, but rewards you for holding real estate assets, especially. I think for the listeners, it's important to even talk about that just briefly. And I'm sure you're experienced with all that now that you're buying and owning since 2016. So what did that look like compared to? I mean, you're selling notes and then you're flipping and you're getting hit hard with taxes. I don't want to get super deep into numbers, but just like what has been the difference in terms of your taxable income since you started buying and holding?
Well, grown-ups have depreciation, so real investors do, I guess, right? I was joking with a buddy of mine. I was like, all I want to do is I want to buy a building that doesn't make sense to me. And the only reason why I'm buying it is for depreciation. That sounds fun, right? Like, and what that means is you have a very high active income and you have to basically just take $500,000 or $1 million or whatever and place it into some property that you're doing it just so you don't have to pay taxes on that money because you want the depreciation, right? And I'm like, that's what real investors do, right? I want to be a real investor one day. And so the depreciation is a huge factor of true real estate investing. And it basically is the tax code telling you, hey, this is how you don't pay taxes, depreciation. I have friends of mine that make a tremendous amount of money that haven't paid taxes in over a decade. Now, why is that? People are like, oh, they're cheating the code. I'm like, no. Their businesses pay taxes, whatever, things happen, whatever. But like, they have payroll tax. You can't get away from all that stuff. But your personal income tax, you can totally get away without paying, because if you invest all your money in real estate and there's other tax codes out there that protect you from paying taxes. So if you make $1 million and you go buy a $5 million building and then cost seg it, you're probably not going to pay taxes that year, right? Because you on that $1 million, because the tax code says you can do that. And so, so that said, it's a huge benefit, huge profit stream, basically, because not paying taxes is basically extra money. So what changed on my side of things, going from active to more of a passive strategy, on the active side, for some of the people that are like full-time jobs and they're investing on the side, you probably don't get qualified as like a real estate professional on your taxes. If your full-time job is investing, then you can get qualified as a real estate professional. Why that's different is that if you're flipping a house and your main source of income, now I'm not a tax attorney or a CPA, don't quote me, this is my experience. If your main source of income is, I don't know, you're a doctor or whatever, and you flip a house, you're not going to be able to write off any expenses from that income that you make from that flip, because it's not your business, right? So you can't really write off business expenses through it legally. Some people do it and don't get caught, but But if you're making your main source of income on real estate, then you can call yourself a real estate professional so that you can write off everything, right? You can write off your car, you can write off your cell phone, you can write off all sorts of stuff. So there is a way to get a lot of deductions from that, but it only goes so far. Like how much are you going to write off, right? If you make $1 million, can you find 900 grand in tax write-offs, right? That's really challenging to do. It just basically meant that you didn't make any money. So you need that depreciation to offset that. So, and also when you're getting taxed as a passive income bracket, it is less, right? And also if you go to sell those properties later, you're getting taxed on short-term or long-term capital gains, depending on when you sold it. And then you also have the chance for 1031. And the 1031 has been a big play for us that we've really enjoyed since keeping the properties. You can't 1031 a flip. And I'm just going to throw this out there too, just because I see comments sometimes on my videos on YouTube where people say, you're not calculating the capital gains tax you're paying on your flips, right? Spoiler alert, you don't pay capital gains tax on flips. I just want to throw that out there. You pay income tax on flips, no matter how you set up your corporate structure. So, but like I said, I'm not a CPA. Just want to throw that out there. So.
Yeah, if you do the flip, hold it for a year, rent it, and then sell it, you could do the capital gains.
Different.
But you know,
your
that'll be different. Mm-hmm.
Your intention needs to be that it was a rental.
Yeah,
and I'm using that word purposely. So.
But even if you did that, Tarl, they're gonna look at your books and be like, this guy, he's the flipper.
Yeah.
500 flips in 10 years. Yeah, get him. You know.
No, they're gonna be like, that's out of the ordinary. So, and I'm not going to go on a podcast and explain how to do tax evasion.
I know, right? Hey, for that, listen to our episode with Amanda Hahn.
Yeah.
Hey, I had a question, man. So you started doing all these flips, Drew and I, we have like under $10 million assets under management, made like 30 doors, all in California. We're trying to go further. So you went to this conference, you're like doing a few flips. How did you go from that to being buddies with like Kenny? Like what was the trajectory? Like, was it like over 20 years or like, was it like overnight in Laguna, both of you drunk?
Yeah. Both of us. Well, he was drunk. The short of it is, I don't know, we all have our superpowers in business, and my superpower is strategic networking. So in reality, it's like, if I want to become friends with somebody or meet somebody, just give me a little bit, I'll meet them. And now Ken McElroy was not on my list. I do actually have a list, by the way. Ken was not on my list, and he just wasn't, right? And so, but he should have been. Robert Kiyosaki was on my list. And I do now know him, but I would much rather be friends with Ken McElroy than Robert Kiyosaki. So no offense, Robert, but there's reasons for that. I relate to Ken a hell of a lot better. Ken is a good friend, right? Ken is legit. Like when you watch his video, he is who he is. Like everything about it, like him and I just relate a lot better together. So I'm happy for that. But the reality is that my events company actually has helped a lot with me meeting really cool people over the years. My best friend's Brandon Turner, right? Him and I are from Bigger Pockets. I consider him my best friend. So why? But I met him through my events business, right? We in Bigger Pockets. I actually met him through my events business before I was even really associated with Bigger Pockets. And so you meet these people, you build good relationships. I've met a lot of other really high level people over the years, and what you find is that once you kind of meet them, if you have a commonality, then you just like, how can you be friends? The challenge that I think people have with meeting cool people is that they have something that they want from them. And you could smell that shit a mile away if you're one of those cool people, right? This person's talking to me because they're leading me because they want something from me, right? They just want a picture with me, or they want to know. And I've seen this with some very high level friends of mine. Like people don't really do that. People don't do that to me. I'm not that cool, but I've definitely seen it with other people, and you could smell it, you could sense it, and you're like, stay away from them. But if somebody's coming up and they're like, one, just chill, and two, they want to become friends, and they legitimately have an interest in who you are as a person, and they give value to that person, then that person's more likely to, reciprocate in some way. One of the values that I've had is that if I run a cool event, they get to speak at it, right? So that also helps bring value to them. I know people that they want to know, right? But it doesn't hurt too if you just want to be friends and you don't even really care about the business side. I don't know if that makes sense. Brandon, Ken, all those guys, we could have never done business together, and I'd still have them over for Thanksgiving. Like we'd just be friends, right? I don't know if that makes sense.
Yeah, I love that. I just like to kind of go into, lessons for anyone listening. So I'm going to kind of lead you on this question. What impact has networking and just meeting other people in the industry had on your particular investment portfolio, your level of success?
It's everything. So, and I say that because my acquisition strategy for years revolved around networking. So I did what I was good at. So I'm like, all right, well, this has nothing to do with meeting high level people. This is also networking with local people. So if I went to a meetup, right, somewhere, and I'm a buyer, right, then I want to go network with people that have deals for me to buy. So if I just go up there and be like, hey, I'm cool, but give me your deals, that's one thing, right? Versus like, hey, I'm not only cool, but if you ever want to drive any of my properties that I have going on, and if you ever want to, if I know you want to meet for coffee, but like, how about we just go meet at a project instead, and I'll show you what we're doing there, right? Oh, hey, you have questions on how to like analyze something like that? Send it to us. We'll do it for you. And in return, just give us first chance on the deal, right? So part of it was, the wholesaler might think, or the realtor might think that they need to give me value. And I'm like, no, I'll give you value. Just make sure you give me all the deals that you find. Right. So networking also with everybody around me like that, because I do want something out of them. I want the deal, right? I want the deal that they bring. But if all I do is, if I spend a bunch of time with some of these wholesalers or, realtors or whoever, and I get nothing out of it, but I helped them with their businesses, and that's fine. Right. It's just what it is. You don't know who's going to do a good job in finding you a deal. You don't know which squirrel is going to find the nut, right, to be able to bring it to you. You have no idea. So you just make a wide net and be cool to everybody, right? So that's one. Two, money. Money helps a lot, right? So if you need to actually have money to buy deals, I have a whole presentation. I'd be like, hey, this is what it's like to buy 10 deals in Seattle, right? And you need to put 10% down on each of them on a 90% loan to cost flip. You need like $600,000, right? Anybody got that lying around? Most people don't, right? So instead, you need to go borrow that from other people, right? So and you either got to do it with lenders, or you need to do that with private money, or you got to raise capital, start a fund, whatever, right? You got to find that way. So you got to network. How do you network with high net worth individuals that have money to give you, right? And I have kind of a rule: don't take somebody's last dollar to invest it in real estate. Like, that's ridiculous. You want to have an emotional issue. I want somebody to invest with me that's okay. Sorry, not okay, wrong word. That understands they can lose it, right? Let's just put it that way. And that's accredited type people. So you need to be able to network with them. So how do you find them? So if I couldn't have done any of the deals I've done without being able to network with people that have money to give me, right? For lack of a better word, or standard or statement, what you want to say it. So that's also huge. And I can go on and on about that, but the doors that open up, the relationships, the networking, you build a good relationship with somebody, they know people, they refer you out to people, you build good relationships with them. But at the end of the day, your reputation's everything when it comes to that. And bad reputation spreads faster than good reputation. You can build a great reputation and have it destroyed in less than 60 seconds. So how do I say it? Like, it's like with contracts, right? Joint venture contracts, partnership agreements, whatever. It doesn't matter what the contract says, right? If how do I say it? Like, it doesn't matter what the contract says. Like, if you're a shitty person, you don't give a crap what the hell the contract says. Like, you're just going to break the contract and have to go to attorneys as it is. So like, do business with people you can just shake their hand with, right? Now, don't get me wrong, I still get contracts, right? Everybody should have something in writing. But if you can't like shake their hand and trust that they're going to do the deal, then why would you do business with them? If you wouldn't let them babysit your kid, why would you even let them babysit anything in your business, right? So I that's kind of my mentality with relationships and networking, and also do no harm kind of a thing, right? So if I'm going to go out there and give advice to somebody, then I'll make sure it's good advice. If somebody needs help, then I'm going to do my best to help them where I can, but do no harm while doing it. It also means do no harm to myself also, right? It goes both ways. And because some people just want to take, and you got to watch that. Don't be that person, and don't let other people do that. Don't let other people do that same thing to you. So I don't know if that was a rant.
Yeah, no, I love that. I love that you're saying lead with value.
Yes.
And then, put it out there. And then of course you're going to find those individuals who align with you. I'm all about, hire slow, fire fast. And there are a couple of particular things that I look for. But this is about you. So I was kind of curious, Tarl, what are some of those markers of like, okay, I kind of want to find out more about that person, maybe work with them. What are some of those maybe character traits or qualifications?
Do they like to snowboard, scuba, rock climb, like any of that?
Hell yeah.
There's some really cool people out there on social media and really cool people on stage that I just wouldn't care if I ever met them or not, right? And I have a different thought process on that kind of stuff. Like I want to collect friends, right? And it's a bonus if they are also like legit business people, right? And
Nice.
they also have to have like-minded values, right? And what I mean by that is, similar, not the same values as mine, but similar on the same path. Do they want to strive to be a better person? Are they the person that screams at the freaking waiter or waitress? Like, I don't ever want to hang out with that person. Like, I'll leave right away if like somebody was a dick to a waiter or waitress for no reason. So like those type of people, I don't care who they are. I don't want to do business with you. I don't care what you can do for me. Like, I don't need that in my life, right? And so if somebody's just super cool, got great values, right, in alignment with what I believe, right, in some way, and not what I believe, wrong words, in alignment with what I want my life to be like they love to go do cool stuff, they take care of their kids, like if they have kids, they're nice to people, right, they want to become a better person, they want to grow and develop themselves, versus like crabs in a bucket while they're pulling you down and negativity and all that stuff. I don't care who you are, I'm not hanging out with you. My ex-business partner back in my ex business partner, I've had a few partnerships, became that person. So and just as an example, I would never do business with the person in a million years after they've showed who they were, right? If I show up to this person as we started making more and more money, all of a sudden started getting into drugs and, other things. And for me, if I met him as a outsider into this type of stuff, then I don't care what deals they have. I don't care what money they got. I want to do business with them because I don't want to be around it. And so, which is number one reason why that partnership failed. But
Definitely. I think
it has
to
more
clarify,
do with character.
Yeah, character. Yeah. And I think for me, it's very aligned with kind of what you're looking for, which is growth mindsets. It's much easier for Vince and I to have a conversation or a partnership or any kind of relationship with people that just have a growth mindset and just have a bit of a higher bar or a higher standard. As I think Tony Robbins said in a book, where he's like, just raise your level and meet yourself there, and then also keep that same high standard for others. And which is not to say they have to be super successful and rich to be friends. It's just like they have the desire to be 1% better than they were yesterday. That's it for me.
There are some of my favorite people would not be considered successful on a financial level, but they're successful in life to me.
Same.
And I've met some incredible people that they couldn't tell you anything about business and finance whatsoever, right? I think that's the misconception that most people have, is they see people in these social media outlets or what they see on TV or on stage, and they're like, I got to be that person's doing more than me, I got to be like them, and they're comparing themselves to spoiler alert, a lot of these people are fake, right? Just want you to know that. And they're comparing themselves to this fake world, right? That doesn't really exist, because that person on social media cares what you think of them at the same time, more than you think of them. And so we compare ourselves to this way too often on a business sense and entrepreneurial sense. And it creates a lot of turmoil inside of us, most entrepreneurs, because we're comparing our success to others, and versus what's your success, what matters to you. My wife and I, at the end of 2017, realized, wait, we were just building our businesses and spending 100 miles an hour just to make more money. But for what? We didn't know why we were doing it. Like literally, we're just doing it, right? We did 40 houses. Now we got to do like 50, right? Oh, now you do it. Like you just got to do more, right? That's what you're supposed to do. Why would you do less, right? You're supposed to do more. And so I asked that question, and it changed everything, our entire business, our lives, our sanity, just to go like, no, we don't need to do more. Like, let's do less and go travel and actually live our life. It's like, no, after 30 years of grinding, then I can go do that. That's dumb. Screw that. Like, you might not have 30 years. So do it now. Right. And so enjoy your life today. And who cares what other people think of what you're doing?
Yeah.
I guess. So
I love that. Well, speaking of growth mindset and growing and all that achievements, I'm just kind of curious, is there like a 5-year goal? It's like a long-term goal.
No.
What is that?
I'm so bad at that. Like, no, I don't have that. My team wants that. Right. And we operate on a EOS, entrepreneur organization system. Entrepreneur operating system. Sorry. Traction. And we operate on that. And that system wants you to have 3 years, 10 years, all that kind of stuff. And I sat back with my team. I'm like, you guys want to help with this part? Like, because so in Traction and EOS has visionaries and integrators. And I'm definitely more of like, I coined the term, I'm a visionary of integration. So you can have an idea. I'm not the spark. Let's just put it that way. Like I could take somebody's spark and make it a forest fire. But somebody else has to come up with that spark.
Is that why you and Ken partner and are so aligned? Is he kind of like the opposite in that way?
He came up with the spark for the event. Yeah, he's pure visionary. And he came up with the spark for the event. But then I was able to take that and just set that thing with gasoline and build it into what we've done now. So it's a good format. Brandon Turner and I run 3 to 4 masterminds a year together. And if you look at our partnership with it, I run 95% of the mastermind, right? And probably 90+% of everything we do in the mastermind comes from my end. But the spark of the mastermind and the spark of the initial idea all came from Brandon. And so
Nice.
and I'm like, oh, I like that. I could take that. Let's do it. Right. So it is a shortcoming on my side. I definitely have visionary stuff in me, but like I do a lot better when somebody I respect and trust says, I have an idea. And I'm like, I love your idea. I'm going to go destroy that idea. Right. And make it even bigger and better and grow it.
That's cool. So it sounds like, without you defining it as such, you figured out, like you mentioned, it's a shortcoming, right? And it sounds like you're finding those people and aligning with those in partnerships who counterbalance that, who maybe that's their strength, is that spark. And I think that's a really cool point to chat about, which is you're creating partnerships with people who aren't like you, aren't the exact same skill set or even mindset, maybe just a growth mindset, of course, but you're finding and aligning with people who balance your skill set out. And I think that's a really good point, something that took me too long to figure out. It's part of the reason why Vince and I have done well together. He's kind of that guy where he's like, we're doing this deal. Here's what we're doing. Here's what I want in AUM. And then, we get the deal, and I'm you essentially. I'm forced to now figure it out. Like, all right, here's our PITI. Here's what we can do. Here's the move. Here's the plan A, B, and C. And or we just killed the deal, whatever it is. But yeah, that's just something I wanted to stop and point out.
Like, it's I mean, if you have a business of nothing but visionaries, nothing gets done. So you need some integrators in there.
Man. I heard this somewhere. I don't know who said this, but it says people before profits. It's like that's like it's very similar to what you're talking about, right? That's very important to me as well. Trust, people, relationship, those things are like, Drew and I are best friends. So, money is almost, it's immaterial to me. Like if, something happens and we need money, I will sell everything just to, make sure that the other person is all right. So that's like, is that like kind of like the thing you go for too? Like you go for those character and people first before like what they're valuable in and stuff like that?
Yeah, totally. I mean, they got to be buddies, right? And like you got to be, you're married to them if you're in a partnership. So it's just to kind of like take a step back. Like I used to not be this way at all. Like I used to not understand partnering. Like it didn't make sense to me because my entire focus was flipping houses. So, and that was it. Like for years, like I flip houses. This is what I do. And, Brandon and I created the Maui Mastermind in 2019, and we had 28 legit, awesome, great, super duper crazy people. Some of them you named to me prior to this podcast that were on this podcast. And the everybody there, like actually that's where Open Door Capital was created, which is Brandon's company, was at that mastermind. And because people were partnering up, people were talking about, let's do deals together. I'm looking around going like, I'm not doing deals with any of you guys. Like, just give me the deal. Like, I'll buy it. Right. That's fine. Like, what are you bringing to the table? More money? I don't need it. You're going to operate it? No, we'll do it better. Like, so it's me. So I didn't understand it. I'm like, you have to bring something to the table. You can't just like partner because we're friends. That's dumb. That's how I felt about real estate. Right. And then it took me until 2021 to, probably I'd say March 2021 at one of our masterminds in Maui. I mean, some of these people are my absolute favorite people in the world. And we're sitting there in Maui and I'm looking around. I'm like, what is wrong with me? I have some of the coolest freaking friends, right? Why wouldn't I be doing business with some of these people in some way? We should be thinking of stuff like that to do, because we would never, none of us would ever screw each other. We would all like, even if we just made some money, it would be fun, right? Just to do it, right? And it took a long time in my career for me to like switch over that mentality of like, hey, not everybody needs to be, okay, well, I brought in exactly this, you need to bring in exactly that, and what are you bringing me? Like that kind of stuff. At certain levels, at certain high levels, you should be thinking like, is this going to make my life just more enjoyable, right? And am I going to have more fun and less stress doing business with these people? It doesn't always have to be about more money. And like if you're in sales, for instance, like this is a good example. We do this with our loan officers. Is like, you can go make more money selling loans for somebody else, yes, but you have to do like all these things, right? And you're not hanging out with us cool people. If you work with us, you can do half of those things, right? So you can just go focus on what you're best at in sales, right? And you get to hang out with us cool people because we do cool stuff, right? So it's like, is it more fun and less stressful, even though you might make a little bit less money, right? So you just do more volume. So that took me a long time to figure it out, which was also why I never understood like people that like did funds, right? When they didn't do high volume, especially on single family. Like if you're starting a fund and like, I have a $10 million fund for single family, right? I'm like, why do you have a fund, right? I didn't understand it, right? Like it's just because you can make more money just doing private lending, having other people just give you money on debt instead of a fund, right? It was the same concept for me, like thinking about why would I do business with somebody and give them half the profits if we could just make all the profits? That sounds way cooler. And so does that make sense what I'm saying? Like,
yeah, definitely makes sense.
Took me a while to get to that point.
No, it's good, man. I we like these kind of conversations. It's people listening can follow it. It's great to talk to Neil Bawa and these guys, but people can't relate to. He has 4,500 houses. What does that mean? Like I can't do that, right? But if you say like, oh, you door knocked and then you cry in the car like me, and then you bought like flips and stuff, that people want to, it's the American dream, right? Anybody can do it. That's why I like this country. So I have a quick question I wrote down, was very, very technical question, is, the values in accredited investors, right? So what are you doing? Let's say you have a meetup in Seattle. Is that where you live, Seattle?
No, I live in Texas now.
Okay, Texas.
My entire business is Seattle based, but I moved here in June.
Okay, so you have a thing in Texas, and then let's say you throw a meetup. What are you saying in the meetup, or to invite these accredited investors? And then what are you kind of talking about in the meetups or the events that they want to partner with you? Is it you're a cool guy, you have blue eyes, or what is it? What is happening?
It's probably my eyes. Yeah,
probably the chest and the eyes.
Yeah, for sure. That's a good question. I think that's a different question. I give you an answer differently, just because if you're just setting up a RIA meetup locally in your area, right, it's kind of hard to structure that in a way where you're just going to go attract like 50 accredited investors, which you can, right? You totally actually can. There's a way to do that. It's a lot of work and whatnot, but so that would be the first thing. Like if you're if you're ever going to do an event, now caveat, we used to run 5 meetups a month in Seattle. We were the largest RIA group in the state of Washington, so I have a little bit of experience in this. But it all starts with like, what's your intention for the event, right? Like, why are you doing it? If you're doing it just to network with people in general and meet other cool real estate people and drink beer, then cool, right? Have fun, right? If you're doing it because you want to meet 30 new accredited investors every time you run the event, then that all comes back to marketing and how you're marketing the event to attract those type of people, right? And then when they're there, like, how are you not going to waste their time, right? So that they come back again, or you get what you're looking for from the event with them being present. So those are all things you have to really plan out and think through. So is there anything specific that you're asking on that?
Yeah,
go down some deep rabbit holes on this stuff.
No. So we do have host events and stuff like that. So we attract a wide amount of people, and we talk to a lot of people on the podcast, like Brian Burke and a lot of these high level guys. Most people tell us that my passion is like helping middle class Americans and getting them like to a place of financial security, because my family is middle class, Drew's family is middle class, and that's where we come from, right? But the problem we run into is people with middle class or poor, they that way because of the mindset. It's not because they're not smart, or it's not because, I have a 6-figure job. Drew has a 6-figure business, right? But it's still middle class because we are doing middle class things, right? So when we do these events and we don't have a very clear criteria, we tend to talk to a lot of people who don't have that kind of mindset. So, but we want to grow and obviously buy $100 million of real estate, right? So we need people who we can partner with. So that's the angle I'm going for.
So who do they want to meet?
They want to meet the guys who can give them the opportunity to be that way, right?
No, so the accredited investors?
Or they could be regular investors too,
Okay. It depends on, so if you want somebody that is an accredited investor, then you got to ask that works as a whatever your local market dictates.
A doctor or whatever. Yeah.
Yeah. See, I'll use Seattle because I know Seattle. Seattle's full of tech workers, right? Although they're all moving to Austin right now. So Austin's full of tech workers, right? So the Bay Area, whatever, OC probably has a bunch of business owners. So if you're in a tech savvy area, like who are those? Who's your persona, right? Is it your persona, your $250,000 a year tech worker that has a lot of disposable income, looking to, hoping to get $100,000 investment out of them as an LP in your fund, limited partner? Is that your persona? And they're watching YouTube all day. They cruise on bigger pockets. They're interested in real estate. Who are they, right? Because sometimes those people that might have the money, they also might be interested in doing their own deal, and then they're not going to give you the money, right? And so are they wanting to be passive because they're so busy with their own businesses or their own jobs that they can't invest in their own deals? Would they like to invest in their own deal, but they know they don't have time, but they have all this extra capital, so they'd rather just invest it with somebody else while they go find their own deal? So what's that persona? And then once you nail down that persona, then who do they want to meet and what kind of event would they go to? So, and can you pull it off? So if you're looking at high level people, right? Who are they going to want to listen to? Is it going to be tax stuff, right? Is it going to be, can you host an entire event, how to make passive income and stuff like that in real estate? Maybe they're looking for that. Well, cool. That passive real estate event just happens to be how they can invest their money in your fund, right? And so and then it all comes back to marketing. It doesn't matter how cool your event is. If you can't market it and get people to show up, it's a shitty event, right? So where people fail, right, in my opinion, on meetups in general is that they don't market it. And so, or they don't market it correctly in the right way. And one of the questions I always ask people running their meetups, I'm like, okay, how many people do you have showing up? Let's say they say 100. I'm like, cool. How many of those are returning? And they go, I don't know. All right. Well, that's a fact. That's a failure point. You got to know how many people are showing up to your event regularly, right? If you have 100 people show up every month, you're like, I'm crushing it. But if only 30 of them are returning and the other 70 are new, then I'm like, cool. You have great marketing. You have a shitty event at that point because nobody wants to come back. Or it's like, oh, I have 100 people show up and it's always the same 100 people. Cool. You have a great event, but you're not marketing it, right? So you can grow it. So you have to build those funnels, and it all depends on who you're tracking. And then who do you know is showing up or not? Like, do you get data on the people that show up to your event? So you know where they're at, right? Do you know what they invest in? Do you know what they're interested in? Is there a way you can collect this information from them, right? Maybe you can only get a sample size of them, right? Because you don't want everybody to spend 20 minutes filling out a interview sheet when they show up, right? So there's ways to mitigate that and make that even faster through technology as well. But that data is super important. The more events you do, if you're doing it on a regular basis, because you can use it, you can leverage it. And then you can make adjustments, right? I don't know if that makes sense or the answer that you're looking for, but that's
no, it definitely makes sense. It's very similar to a lot of the high level guys. You guys all think, very similarly. So that's really good. I know we're running out of time, man. Drew, do you have any final questions?
Yeah, I would like to kind of get into the why. What's your why? What was your why? What's your why now? Like before you got started, and how about today?
Pay my bills. That's a good question. So I never really, I actually, honestly, that's a tough question. Struggling with the why for years, pre-real estate even. I've been self-employed since I was 20. Haven't had a real job, and other than I did work at Sears loss prevention in college, right, at one point. So my entire career I've been self-employed in some capacity, and that why question was always like, what's your why? What's your purpose? That's what's, as a business owner or a salesperson, that's what's going to get you out of bed and do the work you need to do, or push past those fears and blah, 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 bullshit. So, and I can never answer it. Right. And then I realized that I'm really good at helping people find out their why though. Right. And I'm really good at helping. This is where that spark comes in. Like, hey, somebody else has an idea. I'm going to jump on it. Somebody else needs to come up with an idea. I'm going to ask them tons of questions to be able to help them figure it out. Right. So I'm really good at that. But my purpose for me, what I've selfishly for me, has more to do with my current state of mind. Right. And I've realized doing our mastermind that Brandon and I host multiple times a year, we end every mastermind with the Vivid Vision. Vivid Vision was a book written by Cameron Herold, and we use it, right? So we spend the last couple hours of every mastermind we host doing the Vivid Vision with people. And my Vivid Vision always keeps coming back to a single day, right? Basically, not the perfect day. It's more like the perfect state of mind in that day. And Brandon wants to be a billionaire. I don't give a shit about that. I don't want to be a billionaire, right? If I am, cool. It's not because I worked for it. Like, it's going to just happen because I just build, maybe if my state, like, I don't know how this makes sense to me. So sorry guys. But if it's because of what I'm doing today is where my highest and best use is, my peace of mind is, what I want in that moment is happening, such as like I'm with my family, I'm able to have those freedom option choices to go do what I choose to do at that time, such as maybe I want to go build 5 businesses, maybe I don't. I want to be able to scale down. I want to be able to scale up. I want to be able to take 6 months off. I want to be able to work my ass off for 6 months. I want to be able to have all those options so that I can live with my best life for me and my family. And if that means that I'm going to play video games all day, then that's my why, right? But I have the ability to do that. Does that make sense? Like, if it means like today, my kid's sick, right? We just found out a few hours ago. I'm like, okay, cool. So when I'm off this call for you guys, I'm canceling all my appointments, right? Because I can do that, right? Because I'm a grown up. And so I'm going to go do that. That's going to become my purpose now.
So would you say your why then and now is for freedom?
It's always been for freedom. So, yeah, but
that's what it
freedom,
is.
Freedom, impact, choices, options, yada, yada, yada. I love people that have a way bigger purpose than themselves. And they know it and they live it and they're driven by it. Right. I got to meet Tim Tebow not that long ago and hear him speak too. And when you hear him speak, right. Yeah. I don't know crap about this guy. Right. Like, I was just at a charity thing. Then it happened to be his was a charity. I went to it last minute. That guy has a huge passion and purpose for his life with what he does with human trafficking and whatnot. And so some of the things he does with special needs kids too in third world countries, like, you feel it, you hear it. And I get like, not jealous is the wrong word. I'm like enthralled by it, right? Like this guy knows his purpose, right? For what he's doing. I would love to have that. Like, that sounds great, right? At least I think I would like to have that. I just don't have that.
Freedom.
That's yeah.
Sorry. Go for it, Vince.
No, man, that's awesome, man. I don't want to keep you too long. So is there hey, next time you're in Orange County, man, let us know. We have a few properties. We'll love to host you. You could just stay in one of our places. We have a bunch in Orange County.
That sounds fun.
We'll go to Laguna, get drunk, have a, where did you guys go to? Is it called the Loft? What was it? Sky Loft?
We were at the it's that fancy hotel that's there. That's on the coast.
Oh, I know.
Super fancy one.
Yeah, I know which one. Okay, that's
overpriced. Let's put that.
Overpriced, yeah.
There was an event there. It was an event that we were both at. So
okay, I'll try to come to the Limitless event, man, next year. I know Kenny was talking about it on his podcast with Daniel. Okay, that sounds good. How can people get a hold of you?
Instagram. There's a lot of fake ones out there of me though. So it's at Tarl Yarber. Actually, my real name, Tarl Yarber, Yarber. If it has any other symbols around it, it's a fake account. It's kind of weird how that happened. Like, there's a shit ton of fake accounts out there. Yeah, it's crazy. Maybe we should.
That's how you know you made it, man. If you have a fake account, you made it.
I was gonna say, Vince, I think we're losers, man. No one's thinking Andrew McCormick -17.
Like, yeah, I would pay $8 on Instagram to get a freaking blue check. I just wanted to say that out loud. So that way, people. So because the verification process is such bullshit on Instagram. It's so subjective. But besides one. So on Instagram, also we do have a lending business, so I'm going to selfishly promote that. You can definitely check us out, fixatedfunding.com. We do hard money lending and we do small multifamily, mostly single family. Those are kind of bread and butter. And if you're interested in that, I will give you my funding email, right? Which is Tarl at Fixated Funding. So, and that's the best way to get a hold of me.
And then you just do debt. You don't do any equity lending. It's just mostly just debt.
It's funny that you asked that, right? We are considering doing a private equity fund right now for that main purpose. So we can do more JV partnerships with people. We're right now actually in about, December 4th or 5th, I'm meeting with 2 people that we were discussing partnering on something like that, where we would create a fund. My lending business would be a portion of it, but the fund would be dedicated to where we could bring like private equity to other operators, because I used to get my money from private equity companies at one point, or one of the ways that I did it. The difference that we would do is we would also add operational support. So we have a tremendous amount of systems and operations that we've built over the years to be able to do single family even better. So why not find awesome local operators somewhere and be like, hey, we're going to give you money. You bring the deal. You got to work the deal, but here's also some really cool support that's going to help you out as well. So let's partner up together, right? So we're looking at building that out right now as our next generation of what we do on a real estate arm. So.
Oh, you should do it, dude. If you ever want to get involved in Orange County real estate, I know a couple of guys. Yeah.
Yeah. That
sounds good, man. Thanks for coming on the show, dude. Thanks so much.
Thanks for having me.